will come to order. Thank you all for being here, most particularly my colleagues and the witnesses who are appearing today. Every single day in America, at least some of the Americans who use peer-to-peer applications transfer money will lose hundreds, maybe thousands of dollars after they are tricked into sending an irreversible payment to someone perpetrating a scam, or their accounts are simply skimmed of money. While this problem affects all peer-to-peer apps, nowhere is it more problematic than on Zelle, which is the largest of them, and it is run by a company called Early Warning Services, which in turn is owned by 7 of the nation's largest banks. Sending a payment on Zelle is fast, easy, and irreversible. 80% of Americans who have bank accounts already have it sitting there ready to use. Zelle's unique characteristics make it convenient and trusted by consumers, but it also makes them a target for scammers. Zelle and the big banks who own it know that Zelle's speed and convenience makes it a target, and they're well aware that every single day some of their customers will be hurt. They know this, and they're willing to accept the risk as the cost of doing business. But it is a cost for their customers, not for them, in the vast, vast majority of instances. Last year, the subcommittee initiated an inquiry into Zelle and its 3 largest owner banks because of these widely reported harms. And after 15 months of investigation and poring over thousands of pages of data, the subcommittee has found that Zelle and these 3 banks, which together comprise 73% of payments on its platforms, they are simply not doing enough. They are failing to protect consumers from the growing risk of scams and fraud. I am going to ask that the majority report with our findings be entered into the record without objection. Our investigation found that customers of Zelle's 3 largest owner banks, JP Morgan, Chase, Bank of America, and Wells Fargo, disputed over $372 million to scams and fraud in 2023 alone. Nearly 3/4 of these claimed losses, totaling $270 million, were never reimbursed by the banks. But what is most striking to me is that the unauthorized claims, that is to say, losses without consent or approval by the customer, were reimbursed only 38% of the time, which is down from 62% in 2019. Those claims are required to be reimbursed under our present existing law. In fact, banks are required to reimburse customers when they lose funds through those unauthorized transactions, such as hacking or other unauthorized access to a customer's account. For 2 out of every 3 customers who called their bank to report they had been defrauded in this way, without authorization, without approval, without consent, they were denied reimbursement. We don't know what's happening inside the banks. And frankly, your testimony gives us no enlightenment so far about the reasons for those denials. In fact, so far as I can tell, your testimony presents no numbers. You simply say that 99.9% of all the transactions are without problems. But here is what's important. When a customer is tricked into transferring funds to a bad actor, the outcome is even worse. Without legal requirements to repay customers for those lost funds, our analysis found that in 2023, Zelle's 3 largest banks reimbursed victims of these scams only 12% of the time. That's a staggering number. Zelle's efforts at self-regulation have not fixed the problem. In June 2023, Early Warning Services enacted a new policy requiring banks in the Zelle network to reimburse customers for certain types of imposter scams. But our investigation found that this policy change affected less than 20% of the scam victims, resulting in only $18.3 million in reimbursed scam claims in the first 6 months after it was implemented. Meanwhile, Zelle is growing. It's growing at a very rapid pace. Despite Zelle claiming that it should be used only with individuals that a consumer, quote, knows and trusts, end quote, banks are increasingly encouraging customers to use Zelle for commercial purposes, like paying rent or buying lunch at a food truck, without offering protections available with other payment methods, such as the purchase protection available with credit cards or the chargeback mechanisms available with debit cards. Yet, when things go wrong, Zelle and the banks are quick to blame the victim and allege that they failed to use Zelle as it is, quote, unquote, intended. In May, this subcommittee heard testimony from 2 individuals whose lives were upended after being targets of sophisticated scams on Zelle. Ariana Duval, college student from North Carolina, told us about how she lost $2,400 after being tricked into thinking she was being hired for an exciting summer job opportunity with a professor at her university. Ann Humphreys, a grandmother from Maryland, told us about how her 94-year-old mother was targeted by scam artists who had personal information about Mrs. Humphrey's brother and convinced her family that he had been arrested and was in urgent need of bail money. Neither of these victims has gotten their money back, nor have many, many others. We've heard from them on this subcommittee, and more are coming forward because of these hearings. Now, the banks may tell us, and they may sincerely believe, that these stories are the exception. They tell us these scams don't matter because more than 99% of transactions on Zelle, as I mentioned, go through without incident. But when we're talking about billions and billions and billions of dollars worth of transactions, 0.1% makes a difference. But whatever the percent, the average losses are $500, and that's a big chunk of change to the average everyday American. So when this devastation falls on them, it can be shattering, even though it's just the cost of doing business. We would never tolerate a car that protects infants 99% of the time in using a car seat. We would never accept an airplane that succeeds in 99% of its landings. And we should not accept a financial tool that protects only 99% of the people who use it when there are ways, in fact, to protect them that are affordable, accessible, and reliable. $1,000 here, a few $100s there may not seem like a lot to banks, given the numbers that you're used to working with, but to most Americans, these losses can be devastating. And a Federal Reserve analysis has found, in fact, that 1/3 of American households are unable to cover a $400 emergency. So that average loss can be severely consequential. Long and short, more must be done to protect consumers from the harms that Zelle and the big banks are failing to stop. We have to level the playing field, providing Zelle users with the same protections that exist for debit and credit cards. Today, we're going to hear from the Chief Executive Officer of Early Warning Services and representatives of 3 banks that own it about why this is happening. But I will say we will be preparing as well for the next steps. We hope you'll cooperate. We sincerely hope that you will be good to the promises that you make in the testimony you've submitted today about wanting to work with us, because I think you will benefit your customers and your well-respected institutions. With that, I turn to the ranking member.
Thank you, Mr. Chairman. I'll just ask that my written opening statement be entered in the record, and I'll just make a couple of comments. In my opening statement, I do point out the fact that banks, something around $160 billion is what they receive in interchange fees for credit cards and debit cards. So there's a stream of revenue available to reimburse people for fraudulent transactions, and that seems to work pretty well. Direct payment to payment is just a different system. There's no revenue being generated here. I think we need to recognize that, because I think the whole point of this investigation, these hearings, are a crime's being committed, and apparently you think that somebody needs to make that victim whole. In a perfect world, I guess that'd be great, that we can make all crime victims whole. As I'm reading through the testimony, I'm actually pretty impressed with the safeguards that these direct payment companies put in place before the consumer actually hits, yes, send the money. So I think there is an awful lot being done. I mean, can more be done? In testimony, it sounds like these companies are willing to look at some other things. But again, the bottom line is a crime is being committed. It's not the bank's fault. It's not these direct payment companies' fault. It's the criminal's fault. And I just have a hard time, unless you're willing to impose a fee system where these companies can charge the consumers for the use of their payment transfers, so there's a pot of money to actually reimburse. Again, they're reimbursing for fraud and unauthorized transactions. It's the scams that are the difference. And again, I have a question in terms of why aren't we reimbursing the unauthorized transactions to a higher level than current? But that'll be one of my questions for the witnesses. So again, I just want to kind of keep things in perspective. It is different from credit and debit cards. There are a lot of controls. I mean, I was actually, quite honestly, pretty impressed with all the ways that these companies are trying to prompt their customers, be very careful. I mean, this is pretty much irreversible. Before you hit send, these are the scams that are out there. And so, again, if there's more they can do, great. I'm sure they probably want to do it. They don't want their customers being scammed and frauded. But anyway, I'll be interested in the testimony. Thanks.
Thanks, Senator Johnson. I will now introduce the witnesses. Cameron Fowler, Chief Executive Officer, Early Warning Services. Cameron Fowler is the Chief Executive of Early Warning Services, the company that operates Zelle. He took on this role last August after nearly 2 decades in the financial services industry. Melissa Feldscher, Managing Director, Head of Commerce Enablement at J.P. Morgan Chase and Company. She has held a variety of roles in 20 years at J.P. Morgan Chase. Mark Monaco, Head of Global Payment Solutions, Bank of America. He is a member of the Bank of America Management Committee, and he serves on the Early Warning Services Board of Director. And Adam Vancini is the Executive Vice President and Head of Payments for Consumer and Small Business Banking at Wells Fargo. He has spent over 20 years as an executive for Wells Fargo and currently serves on the Zelle Advisory Board of Early Warning Services. As is our custom, I'm going to ask all of the witnesses to please stand and be sworn. Do you swear that the testimony you're about to give is the truth, the whole truth, and nothing but the truth? So help you God. Thank you. The record will reflect that the witnesses answered in the affirmative, and we're going to be using our standard timing system today. All of your written testimony will be printed in the record in its entirety, and we would ask that you try to limit your oral testimony to 5 minutes. Mr. Fowler.
Chairman Blumenthal, Ranking Member Johnson, and distinguished members of the subcommittee, thank you for the opportunity to testify today regarding the Zelle network. My name is Cameron Fowler. I have the privilege of serving as CEO of Early Warning Services. For more than 3 decades, Early Warning has been empowering and protecting consumers, businesses, and the U.S. financial system with cutting-edge fraud prevention and payment solutions. Early Warning partners with more than 3,500 banks, credit unions, businesses, as well as the U.S. government to protect the financial system and the millions of consumers who rely upon it. Early Warning also operates the Zelle network, which is but one of the services our company provides for the financial services industry and for consumers. Zelle is a fast, safe, and easy service that enables people to use their insured deposit accounts at U.S. financial institutions to make and receive payments to family, friends, and other parties they know and trust. Zelle was designed as an innovative digital alternative to checks and cash. Participating financial institutions generally provide Zelle to their customers as a value-added service without fees. Last year, 120 million people used Zelle to make essential everyday payments. For example, family members often use Zelle to send money to each other and to others they know and trust. Additionally, insurance companies, charitable organizations turn to Zelle to quickly reimburse funds to victims of disaster and those in need. The Zelle network includes over 2,100 financial institutions. It is the P2P solution of choice for local community banks and credit unions that often serve rural, minority, and low to moderate income communities. These smaller banks and credit unions account for 95% of the financial institutions participating in the Zelle network, who may not otherwise be able to offer this valuable P2P service if not for Zelle. Zelle is committed to protecting its users from fraud and scams through extensive, highly effective countermeasures and safeguards. Zelle and its participating financial institutions also provide consumers with a broad array of educational resources to help them identify and avoid scams. Our success in consumer protection is demonstrated by the fact that over 99.9% of Zelle transactions are completed without any report of fraud or scam. Zelle also provides industry-leading reimbursement to consumers who are victimized by criminals. Financial institutions in the Zelle network are required to fully reimburse customers for fraudulent transfers, that is, transfers that were unauthorized, going above and beyond what the law requires. Additionally, Zelle goes further beyond existing legal requirements and requires reimbursement for the victims of qualifying imposter scams, where the consumer was duped into sending money to criminal, posing as a government agency, financial institution, or service provider. Fraud and scams are perpetrated by criminals, not payment networks. This criminal activity occurs independent of the means of payment. Criminals typically engage consumers through social media, online marketplaces, or through identity spoofing. This does not occur through Zelle. Although Zelle and its participating financial institutions provide industry-leading consumer protection measures, we cannot single-handedly prevent the acts of criminals who defraud both consumers and financial institutions. Various industries must work together to root out fraud and scams where they originate. Government must also play a role by enabling policy solutions and providing the resources needed to root out the causes of fraud and scam. Building upon this effort, Early Warning organizes leaders from multiple industries, along with government agencies and experts, as part of a national task force for fraud and scam prevention, to develop recommendations for broader strategies to combat fraud and scams. This cross-industry partnership will commence with a summit this fall. We welcome the opportunity to work with this subcommittee, as well as other members of Congress, to further identify and develop meaningful legislative solutions directed at protecting consumers while preserving the benefits and real-time payments for the many millions of consumers who use the service without issue. Thank you for the opportunity to testify today. I look forward to your questions.
Thanks, Mr. Fowler. Ms. Felcher?
Chairman Blumenthal, Ranking Member Johnson, and members of the subcommittee. My name is Melissa Felcher, and I am the Head of Commerce Enablement at JPMorgan Chase, where I have responsibility for our consumer payments business, which includes Zelle. Thank you for hosting this important conversation today. Banks created Zelle in response to the growing demand for a way to securely send money to others they know and trust in real time, directly from their own bank account. Today, our customers tell us, through surveys and through their increased usage, that they love Chase Zelle. It's faster, more convenient, and a more secure alternative to cash. Chase Zelle is more than a benefit. It's an expectation of today's banking customers who want this service through their bank. At Chase, customer protection is a top priority. Fraud and scams have long been a societal problem and a consistent public and governmental concern in this country. And while criminals have now fully embraced modern technology, their core intent to exploit and deceive remains unchanged. They sell non-existent products on social media, perpetrate romance scams on dating sites, spoof legitimate businesses and trusted institutions' phone numbers on caller IDs, using various payment methods to steal people's money. American banks have aggressively responded to this challenge. At Chase, we have increased security measures and risk protocols to protect consumers and combat fraud. Each year, across our firm and around the world, JPMorgan Chase proactively identifies threats, stopping more than $14 billion in fraud attempts. And we leveraged that rich expertise and experience and built these protections into Zelle, the only person-to-person payment network built by the banks. In 2023, the rate of fraud and scam disputes on Chase Zelle was the lowest it had ever been, with only 0.1% of transactions ever disputed for any reason, a number we have seen further improve in the first half of 2024. Last year, fraud and scam claims dropped by 14%, even as transactions on Chase Zelle were up over 20%. We achieved this success through significant investments in fraud and scam detection and prevention capabilities, and by expanding teams doing this important work. These efforts focus on a simple truth. The best way to protect customers from fraud and scams is to prevent criminals from carrying out their schemes in the first place. For example, we know that nearly 60% of scams originate on social media. So we present intercept screens to customers to warn them of these common scams. We use machine learning models to flag concerning transactions for manual review by a dedicated team. This team assesses the payment, and if additional information is needed to determine if it's a fraud or scam, contacts the customer to discuss, and then cancels the payment if they can't be reached. We also close accounts of identified scammers and report them to the Zelle network. These measures have proven successful. Over the last 12 months, we estimate that our safeguards prevented Chase customers from exposing nearly $1.1 billion to possible fraud and scams on Zelle. Despite these efforts, we must acknowledge that banks alone cannot stop financial crimes that are conceived of and largely executed beyond the boundaries of Zelle. These issues are complex and they are global. This is a societal problem deserving of a national, aggressive, and coordinated response. We have begun such conversations with stakeholders in government, law enforcement, other banks, social media platforms, telecom companies, retailers, technology companies, and consumer advocates to develop real and effective solutions that will stop these crimes at the source and bring justice to victims. In closing, I want to thank the committee for the invitation to speak here today on the important topic of preventing fraud and scams. I look forward to your questions.
Thanks very much, Ms. Felcher. Mr. Monaco?
Chairman Blumenthal, Ranking Member Johnson, and members of the subcommittee. I'm Mark Monaco, Head of Global Payment Solutions at Bank of America. I appreciate you having me here today to talk about Zelle. Discussions like this are critical to raising awareness about ways to safely use Zelle, and I look forward to talking with you about how we can all work together to protect American consumers. Our purpose at Bank of America is to make financial lives better. We do this in part by providing simple, safe financial solutions that give people greater control over their money. Today, I hope to highlight why consumers choose Zelle over other payment methods and what we're doing at Bank of America to continue to protect our customers who use Zelle. Zelle has revolutionized how we send and receive money. It is fast, free, and easy to use. It is also incredibly popular. Since first introduced in 2017, customers have rapidly adopted Zelle as the primary method they use to access their bank account. Recognizing its convenience and value over other financial tools, such as checks. Today, more than 2,100 financial institutions of all sizes participate in the Zelle network. Over 100 million people use the platform. Zelle is available to more than 80% of the deposit accounts in the United States. Since launch, customers have used the network to send more than 8.5 billion payments, surpassing $2.3 trillion, outpacing the usage of checks significantly. In 2023, Bank of America customers sent and received 1.2 billion payments using Zelle, which totaled nearly $370 billion. People prefer Zelle because it's instantaneous, free, and digital, which is rapidly becoming the preferred means of interaction. I am proud of our record of keeping Zelle transactions safe. Of the 800 million Zelle transactions our customers sent last year, more than 99.9% were completed without incident. This makes Zelle one of the safest financial tools we offer, one that is safer than many of the other P2P services. Nevertheless, criminals are determined to seek to use Zelle to exploit customers as they do with other payment methods. That's why we invest heavily in protecting our customers. We use strategies designed to detect and prevent fraud and scams before they occur. Fraud prevention begins at account opening. We leverage industry-leading fraud models and processes to confirm an account holder is legitimate upon account opening. Importantly, customers must affirmatively and intentionally enroll in Zelle. We do not automatically enroll customers, require its use, or tie it to other services. Additionally, Zelle users see multiple alerts every time they use Zelle. Throughout the customer journey to send a payment, we advise them that they should only send to someone they know and trust. We ask them to verify and confirm their intent, often multiple times, and we remind them the risks associated with the payment despite the many safeguards. For example, when a customer sends money to someone new, we warn them, show them the name of the recipient, ask them if they are sure, and require them to affirmatively confirm to continue with the payment. We maintain strong fraud and scam detection strategies that are adjusted on a nearly daily basis by a team of experts to ensure that we are keeping pace with the increasingly sophisticated strategies of bad actors. We also partner with EWS, the owner of the Zelle network, and other financial institutions to identify fraudsters and bar them from the network. We are proud to be part of the newly formed National Task Force for Fraud and Scam Prevention, bringing together leading stakeholders to develop a national strategy to prevent fraud and scams. Finally, if a problem does arise, we promptly investigate and take action as appropriate to make things right, often exceeding what is required by law. The bottom line is, we are dedicated to making Zelle even safer as it continues to grow in usage and popularity. We invite partnerships with policymakers and other industry stakeholders to combat fraud and scams, and I believe this hearing is an important step in that direction. Thank you, and I would be glad to take your questions.
Thanks, Mr. Monaco. Mr. Vancini?
Chairman Blumenthal, Ranking Member Johnson, members of the subcommittee. Thank you for the opportunity to be here today on behalf of Wells Fargo. My name is Adam Vancini, and I am an Executive Vice President and Head of Payments for Consumer and Small Business Banking, which includes oversight of our Zelle services. I have been with Wells Fargo for 25 years. We take fraud and scams very seriously at Wells Fargo, and we work hard every day to protect our customers from criminals. We also work hard with stakeholders across government and industry as we strive to deliver convenience, security, protect customers, and promote inclusion in the U.S. financial system. At Wells Fargo, we create innovative banking experiences that help our customers achieve their financial goals. Zelle is one such innovation. Zelle enables our customers across the country, including in your home states, to send and receive money safely and nearly instantly for free. Over 16 million Wells Fargo customers use Zelle to pay rent, split bills, send money to friends and family, and much more. Our small business customers also use Zelle to get paid for their services and pay their employees. We regularly hear from customers that they love Zelle and they appreciate the speed, security, and convenience that it offers. Zelle also allows users to send and receive money safely within the bank's authenticated digital experience. Zelle's transfers do not leave the FDIC-insured banking ecosystem, unlike other peer-to-peer payment services. Unfortunately, fraud and scams are not unique to Zelle. Criminals have always looked for ways to take advantage of consumers across all different payment methods, including both fraud, meaning transactions that are unauthorized, and scams, meaning transactions that are authorized but induced through deception. Zelle is no exception. That is why we have developed customer-facing and behind-the-scenes strategies to detect and prevent fraud and scams. And our strategies are working. Over 99.9% of Zelle transfers by Wells Fargo customers are completed successfully without a fraud or scam claim. We also have introduced alerts and other points of friction to prompt customers to slow down and think carefully before sending money. The best scenario is one in which our customer recognizes the scam and simply hangs up the phone or deletes the text. To help achieve that result, we provide multiple warnings and authentication steps each time customers send money with Zelle. We remind customers to double-check the recipient and only use Zelle to send money to people and businesses that they trust. And after a customer hits send, we keep working to identify possible scams and stop them before they go through. In 2023, we detected and blocked over 1 million potentially risky transactions before they left the bank. We also work hard to raise awareness and help customers recognize and avoid fraud and scams before they transfer money. We include alerts in online and mobile banking sessions. We email customers and post on social media. We also coordinate with mainstream media outlets to broadcast fraud protection information and advice. These efforts are particularly important with regards to scams. Unfortunately, we don't always have enough information to detect a scam ourselves. For example, a customer may be communicating with a scammer in an email or on a phone call that does not include Wells Fargo. So we work to make sure our customers themselves have the information they need to recognize and avoid a fraud and scam. When customers report to us that they unfortunately have been victimized by a fraudster or scammer, we take action. Our analysts digitally investigate fraud and scam claims, and we work with other banks and early warning services to remove criminals from the Zelle network. We also reimburse customers where appropriate, including in all cases where we identify a valid fraud claim. While the law does not require us to pay scam claims, we reimburse customers for certain scams anyway. Wells Fargo remains steadfast in our efforts to protect customers. Zelle has grown quickly and now serves millions of customers at more than 2,100 large and small financial institutions. As digital payments evolve and money moves faster, we recognize our shared responsibility to help prevent fraud and scams. Achieving that goal will require stakeholders across industry and government to work together and share accountability. We welcome the opportunity to work with Congress, law enforcement, and other stakeholders on these important issues. Thank you again, and I look forward to answering your questions.
Thanks very much, Mr. Mancini. We're going to have several rounds of questioning, I hope 7 minutes each. I welcome my colleagues being here. We'll try to stick to 7 minutes so everybody can get a chance. Let me ask you, Mr. Fowler, have you had a chance to review our report? it was provided to you earlier.
Senator, yes, I have had a chance to make myself familiar.
Okay. Any of these numbers, and I'm directing your attention particularly to page 28, figure 6, if you want to have a look at a copy that's been provided to you. Any of those numbers look wrong? I'm assuming they don't,
Chairman,
because
did you
they
say,
came from
Chairman,
Zelle.
excuse me, did you say 28, figure 6?
Page 28. While you're looking, I'll just say to you that they describe in greater detail what I mentioned earlier, namely that only 38% of the claims made for unauthorized losses, which is down from 62% in 2019, have been reimbursed, although unauthorized claims are required to be reimbursed under current law, the Electronic Funds Transfer Act. Do you dispute the numbers that are in Figure 6?
Mr. Chairman, as you know, financial institutions on the Zelle network are required to comply with Reg E. So
Well, these numbers are correct, yes or no?
this is bank data. So
It's correct. Yes. Yes is a good way to answer if you have no disagreement.
Senator, it's bank information. It's not Zelle network released.
Okay. And I gather you don't dispute either that of the $372 million in disputed fraud and scam transactions on Zelle at Bank of America, JP Morgan, Chase, and Wells Fargo alone, more than $270 million were not returned to consumers who lost those funds, correct?
Again, Mr. Chairman, these are bank data to confirm. The important part here, I think, is that all banks are required to comply with Regulation E. As you know, they have the policies and procedures to do those.
Why is the rate of reimbursement only 38%?
Mr. Chairman, I'm not in a position to comment on that.
So you don't dispute that it's correct, but you have no explanation.
Senator, Mr. Chairman, excuse me, Mr. Chairman, the financial institutions that are on the Zelle platform are required to comply with Regulation E.
But they're not doing
And
it.
they're supervised to do so as regulated banks.
Well, that number, which apparently you don't dispute, indicates they are not complying with the current law, Regulation E, Electronic Funds Transfer Act.
Mr. Chairman, my role is to provide oversight of the Zelle network and the operating rules and ensure that participating banks do the same.
In an interview in March, you said, and I quote, "There is a point where the conversation needs to move beyond reimbursement and stay incredibly focused on education, public policy, and law enforcement. And we try to balance our energy across all of those categories." Evidently, reimbursement is not one of your priorities.
Mr. Chairman, I would stand by those statements. I think that across 120 million users, where 99.9+% of the time there is no fraud or scam involved in the transaction, and for that less than 0.1, we have industry-leading reimbursement programs in place. My point in that statement and my point today would be that more energy for all of us needs to shift to the criminals that are perpetrating the crime.
None of your testimony to all of the witnesses disputes numbers in this report. Do any of you have alternative numbers that you think are more accurate than the ones in this report? I gather from silence that you would agree that these numbers are accurate. They come from the banks, as Mr. Fowler indicated, and they are correct. So my question to you, Ms. Felcher, is what's the explanation for only 38% reimbursement of a category? Remember, we're talking here about unauthorized losses, which I think you call fraud, as opposed to scams where there is some kind of consent or approval. But in that category, there's a legal requirement that they be reimbursed. What's the explanation for only 38%?
Mr. Chairman, I cannot speak to the aggregated data. I can only speak to Chase data.
What is the Chase data?
The information that we provided to the committee is based on how the customer initially describes what happened on their initial call to us. And when we complete our investigation, we may determine that the transaction was actually authorized.
So you're saying, what is the data then for Chase, the equivalent of the 38% number?
The data that we provide, and I don't have that number right in front of me, but
You don't have the data for reimbursements of authorized or unauthorized claims?
Unauthorized, I think your question, Mr. Chairman, was about unauthorized transactions. And we do reimburse 100% of all unauthorized transactions. The data that we provided to the subcommittee is based on how that claim was classified upon the initial call that we had with the customer. As we complete our investigation and we determine that the transaction may in fact have been authorized, and that is why you would see a different number.
So you shift them from unauthorized to authorized?
We do an investigation to determine whether the transaction was authorized or unauthorized.
In every single one of those claims, you do an investigation?
We investigate all claims.
And what is the nature of that investigation?
We use a variety of tools to determine that case of whether the customer actually made that transaction or not.
I think a representative of J.P. Morgan Chase said, or was quoted this morning as saying, quote, "It is disappointing that this subcommittee spent a year investigating one of the safest payment platforms only to make partisan recommendations that ignore the underlying problem, the criminals." Do you agree with that statement?
I believe that it is important that we look at the root cause of the problem, which is the criminal activity. We have criminals out there that are taking advantage of Americans, and they are taking advantage of their money.
Have you read the recommendations?
I have not had an opportunity to fully
The
review
recommendations
and-
deal with criminality and enforcement. Do you agree with the statement made by that J.P. Morgan Chase representatives that these are partisan recommendations that ignore the basis for the problem?
I believe that it's important that we look at the root cause of the problem and stop that so we can actually bring justice to the victims.
My time has expired. I'm going to come back to this topic. I'm going to go to the ranking member.
So again, I just want to put things in perspective and clarify things. So give me an example of somebody calling in and saying this is unauthorized, and then you do an investigation and go, it's actually authorized. Can you just, I mean, let's get away from the buzzwords and get it down to like an example. Okay, one of the banks give me that example. Yeah. Do I have to call on somebody? Mr. Monaco.
Thank you, Senator. So,
Put the mic a little bit closer so I can hear you.
I'm sorry, sir. We investigate every claim individually, right? And
Okay, give me an example of somebody saying this was unauthorized, and you investigate and go, no, it was authorized.
an example would be during the course of the investigation, you can verify that, in fact, it was that customer that initiated the transaction through the use of their mobile device or their computer.
That's not giving me a whole lot of greater
So
detail.
they put, you can verify they pushed the button.
Mr. Vancini, can you give me a little bit better example of that versus just authorized versus, you know, they said it was unauthorized, and then you say it was authorized.
Yes, Senator, I think I can give you some better examples of that. So like the other banks up here, we investigate every single claim that comes in. We start with the benefit of the doubt that it is a fraud claim, so that's how it originally gets classified. Through the course of a conversation, you can find a lot of different things that would make it an unauthorized transaction. In some instances, the customer might have made the transaction and forgotten they've made it. They see a transaction they think is unfamiliar, so they're calling it about that. In other instances, it might be a joint account, and you might have
Husband versus a wife.
husband versus wife. You see, your wife has made a transaction on that account. You don't recognize it. You call in. Those are some of the things that can occur in that situation. Mr. Monaco articulated there's other instances that we use as well, where we use robust tools behind the scenes to identify is that the phone, the IP, the device, the location that has been used, and we can talk through that and recognize that was a transaction that was.
I'm assuming
done by the customer.
all consumers are not necessarily angels either, and they may have regretted paying somebody, and they just want to recover a payment they didn't want to make, even though they authorized it.
Unfortunately, in some instances, that is the case, where it's a false claim and the customer is really looking for reimbursement for a payment.
So the figure I used at the beginning of the hearing, excuse me, that credit card fees are somewhere on the order of $160 billion a year. Is that pretty accurate? 160. So that's, again, so that $160 billion is paid by consumers. So I would think banks would prefer consumers use the credit cards because you make a lot of money at it, right? $160 billion worth. The unreimbursed payments here, we're talking about $160 million. Again, if you're defrauded, feel sorry for you, but they're using Zelle because it's free, correct? And a lot of people, I mean, I need you guys to volunteer some things, okay? Correct? I mean, it's free. Let's talk about the security of, for example, choosing to use Zelle so you don't have to walk around with $300 in your pocket that you could get robbed and be out $300. Or if you're scammed on the street, you can't recover the $300. Let's talk about checks. The security of checks. Are banks required to reimburse their customers when somebody fraudulently gets them to make out a check? Now, you can do a stop payment because it's not instantaneous, but once it's gone through, are banks under any requirement to reimburse somebody for a check they wrote out to a fraudster? Mr. Monaco.
No, sir. No, sir, they're not.
So, Ms. Felcher, you actually did a pretty good job of laying out screenshots of the steps that consumers have to go through before they actually press authorize this. Why don't you describe that again? Because I didn't know that. I was actually pretty impressed. I mean, I'd be actually annoyed if I want to transfer money. Got to go through 3 screens or more. Describe what that process is of actually authorizing and sending. Okay.
Thank you, Senator, for that question. So we take a multi-pronged approach to educating and protecting our customers from fraud and scams. It starts even before our customers actually go to use Zelle. So we have a lot of education that we do on our own site, on chase.com, a security center. We also do a lot of education within our 4,800 branches. But in the Zelle,
go through the steps of somebody actually doing a transaction, what a pain in the butt it kind of is.
yes. So when a customer actually goes in to perform a Zelle transaction, once a month, we serve up a scam warning to all our customers, letting them know about
First of all, they
common
need
scams.
to know who that person is, right?
Yes. So
somehow they've got it input in the system who they're making a transfer payment to. So I think the easiest way is if they've done it repeatedly, it's a known person. So what if it's a new one? Is there a separate system where, okay, here's a guy, here's your customer who's made transfers on Zelle before, multiple times the same person, that's probably one process. But if it's a brand new one, is there an additional step now in terms of security? So again, step me through this.
if there is a new recipient, we are flashing up and making sure that the customer does intend to actually send the money to that intended recipient.
So you're already warning somebody, hey, this is somebody totally new. Are you sure you want to send it to this, and is this the right person?
This is the name of that person. We also employ what we call dynamic limits. And so if the recipient and the sender do not have a previous relationship, or we don't have a lot of information on that recipient, we will actually lower the limit of how much the customer is able to send. We also, if a transaction looks suspicious to us, we pop up other warnings. We might ask, what is the purpose of that payment? And if they select to buy goods and services, we will pop up another screen to say, Zelle should not be used to purchase goods on online marketplaces, for example. It's not to buy puppies. These are the common scams. The customer actually has to consent and click a box that says they have read the warning and they still want to proceed.
So if you can indulge me for one more question. So this is bank account to bank account. So are the scammers, are they just opening up and closing down bank accounts really fast, transferring money? You know what I'm saying? Because otherwise, if somebody reports a scam, you ought to be able to recover that if the money's sitting there. So what do the scam artists do? I mean, how rapidly do they change over accounts?
Well, at Chase, when we identify that there is a scammer, we will immediately take action to exit the relationship and report that to EWS.
Do you seize their assets in the account, or again, do they just flush the dollars out very quickly? Again, then they just set up a new account, and again, how rapidly do they do that?
Well, often scammers will move quickly because they know we'll be quick to catch them, and so they will often move the money out quickly from the account.
I mean, on a daily basis, weekly, or?
I'm not sure exactly on that, but I will say the action that is taken prevents that scammer from accessing the Zelle network beyond that.
Okay, well, they just set up a new account. Okay, thank you, Mr. Chairman.
Thanks, Senator. Senator Hassan.
Well, thank you, Chair Blumenthal, and to the ranking member for holding this hearing. Thanks to all of our witnesses for being here today. Mr. Fowler, I want to start with a question for you. Recent reporting has indicated that scammers are increasingly using AI-generated voice cloning tools to impersonate the family members of their victims and then fraudulently convince victims to send the scammers funds over Zelle. So this kind of gets at what we're trying to drill down on here, because, of course, if you authorize something because you really think that that is your brother on the other end of the phone who's in a desperate situation, of course you're going to authorize it if you don't have real information in real time about the fact that there are these voice cloning scams going on. And really the question, from a policy point of view, is who's in the best position here to make sure that we are as aggressively combating this kind of scamming as we can. And I would suggest to you that large financial institutions with huge amounts of resources are in a better position than individuals who may, as the chair mentioned, not even have $400 for an emergency in their bank account. So, Mr. Fowler, how is Early Warning Services working to stay ahead of scams that use emerging AI technologies such as voice cloning? So, and be specific, please, about what efforts and resources Early Warning Systems is dedicating to understanding and disrupting emerging AI scams.
Thank you, Senator, for the question. The key point, which I think is correct, is that criminals who are perpetrating these scams are getting increasingly sophisticated. The fabric of protection that makes the Zelle network as strong as it is at 99.9+% has 5 layers, Senator. It starts with bank-grade security, so bank enrollment, screening, ID&V, KYC, and the MFA.
And I appreciate that. I would like to get to what are you doing specifically to understanding and disrupting emerging AI scams, because I have a couple more questions in just a few more minutes.
Sure, okay. So, Senator, my key point there, though, was that when you bring together bank-grade security, the token associated that makes the Zelle network operate, the rules that we have that we're constantly evolving with the 2,100 banks, and the risk engines of the banks themselves, that's how we together make decisions. The key mechanism, I think, for responding to the challenge that you're identifying, which is emerging technologies, right, is the way in which we take input through our fraud management program from the 2,100 institutions that are on the network, sharing information, trends, tracking thresholds, triggers, and countermeasures where we can see them. It's this type of sharing where one bank organization will have seen a criminal perpetrate or attempt to a scam similar to the one you're describing that gets shared into the network and then back out to all recipients.
Thank you. We may very well want to follow up with you on that. I have a question to all of you. As part of its investigation, the subcommittee has heard directly from victims that scams targeting Zelle customers are extremely sophisticated and convincing. So it's crucial that Zelle does everything it can to educate consumers on the evolving nature of the scams and how consumers can protect themselves. So we'll start with you, Mr. Vancini. Just how will early warning services and its owners who are represented here today improve your efforts to educate users about the existence and characteristics specifically of AI-generated scams?
Thank you for the question, Senator. I think it's an important one. So two aspects. One, at Wells Fargo, we invest heavily in both behind-the-scenes countermeasures that also use machine learning to thwart these scams. These scams and scams in general are very dynamic and they change, and we have to do a lot of work behind the scenes to keep up with them. We also have targeted education that we do both through our communication channels as well as within the transaction itself to call out specific scams that we're seeing and help customers identify the types of scams you're referring to. And then to Mr. Fowler's point, we actually also use the robust data we get in almost real time from the EWS network to update our fraud models and to ensure that we're mitigating those activities as well.
Okay, I'm going to drill down. I've got a couple of minutes left, and I had one more question, but I may submit that for the record. That's the baseline of what you're doing now. It shows some sophistication. The question for the next three of you really is, what are you doing to improve that now? What more can you be doing that you aren't doing right now to educate consumers?
Senator, thank you for the question. What more can we be doing is continuing to invest in new tools, new models to help our customers. And for example, at Bank of America, our customers viewed 1.2 billion security messages last year. We were able to do this using very sophisticated technologies, which, as I mentioned in my opening statement, we update almost daily. And and I think early warning also plays a very important role there, as Mr. Fowler mentioned, by pooling data from all of the financial institutions to improve their models and their decision intelligence capabilities, which we all use.
Okay. And Ms. Felcher, and really what I'm looking at is I'm a consumer using this service. I'm a busy person. Every time I go onto somebody's site, they give me all sorts of information, and I accept all sorts of terms and conditions. And I'm a busy person, and there's a lot of form stuff thrown at me. What are you doing to improve your information you are providing to consumers in a way that will help them be alerted to this kind of scam?
We continue to invest in our education up front, as well as investing significantly in detecting these crimes. We have cyber teams that are constantly looking at the patterns. So just as the scammers are getting more sophisticated, so are we in our ability to detect it.
But again, I'm looking for helping consumers when they get that phone call that's a clone of their loved one's voice. What are you doing to really help educate them before they're in the panic mode?
We provide a lot of information to our customers to tell them, here's the signs to look out for. For example, a family member who seems like there's a lot of urgency that they're in trouble, that needs money immediately, that these are signs to look out for. I think we need to work together more with the other industries and with government on a national campaign to help further drive education on this. Okay. I'm going to let you off the hook a little bit, Mr. Fowler, because my time is up, and I'm going to submit a question for the record because I think the thing we haven't touched on yet, and I'm going to have to leave, is how we can reduce the number of scams by working more closely with law enforcement. I am very supportive of giving law enforcement a lot more resources to partner with all of you on this, and I'll be very interested in understanding what you perceive law enforcement's limitations to be on this and how we can work together better with them. Thank you very much.
Thanks, Senator Hassan. Senator Butler.
Thank you, Mr. Chairman. Thank you and the ranking member for holding the hearing. Thank you to our witnesses for joining. Ms. Felcher, a particular appreciation for you. There are 4 of you on the panel, and you have done a lot of talking. And so I appreciate you being responsive and engaged to the senator's questions. I want to just quickly go back to the ranking member's point, which I think is a valid one. If there's not a pot of resources for people for victims to be compensated from, then how can we expect people to be reimbursed? And so the ranking member made an important declaration that no one quite responded to, and I just want to give you the opportunity to respond for our clarification and for greater understanding. The ranking member Johnson made the note that Zelle was free. And so it made me want to understand a little bit more, Mr. Fowler, as the Chief Executive Officer of Early Warning Services that owns and operates Zelle. Is Zelle a nonprofit?
Thank you, Senator. We run the Zelle network on a cost recovery basis.
But is it a nonprofit?
It is a company, it's a corporation.
Got it. I just want to, again, I want to make sure, and there are fee structures that are associated with the owners of Zelle for the utilization of its services, research, all of those things?
Indeed, Senator. So consumers don't pay fees. The banks, the financial institutions, I should say, who participate in the Zelle network, 2,100 financial institutions, they pay fees to use the network and provide that network through their banking app to their consumers.
But am I to understand then to our financial institution operators that the fees that are charged for account holders at your institutions to maintain those accounts are the funds that you then utilize to pay for Zelle?
Can I take that one, Senator?
Banking institutions, please. I was not going to allow Ms. Felcher to respond.
So we don't charge for Zelle in any format. We don't charge to send a Zelle transaction. We don't charge to receive a Zelle transaction. We and the other banks in the network pay EWS at a per transaction basis to provide that service to us. So for us,
so a Wells Fargo account holder pays no fees to Wells Fargo?
There's no fees directly for Zelle for.
I'm not asking for a Zelle. I'm asking. I think you know the question that I'm asking, so I want to just sort of cut to it.
Zelle is provided for free for all account types, no matter what the charge is for the account type. So whether the account.
So there are customer charged account fees that allow you to accumulate the resources that pay for the creation of this shared service.
Well, I think what does not exist, Senator, is there's nothing analogous to what Senator Johnson was talking about, that there's a swipe fee or a merchant charge associated like you have in the debit card and the
Sure.
credit card network. So there's no direct revenue source associated that comes in for Zelle. I think that was the point.
But there is an underlying revenue source that allows you to create the investment to create this organization. I will move on. I think the point has been made. We have I think, an understanding. I have spent a lot of time on this committee really trying to understand how these investigative operations that the chairman and a ranking member bring forward, how they truly impact not just people who are, of age today, but future generations. How are we thinking about the tool, not just the technology evolution, but the user evolution? And I was looking at the data, given that none of you dispute the data that has been presented by the report of the committee, was looking at the data and was a bit wondering, what would be your explanation for the growing reimbursement decline of younger bankers? Is it that they are more apt to participate online, and those are frequently denied reimbursements? Is it that they are I'm trying to prompt you to help me to understand the particular experience of bankers who are, people who are participating in your financial institutions between the ages of 18 and 30, who are getting reimbursed at a much lower level than people who are much older than they are. Mr. Monaco.
Senator, the safety of all our customers is top priority, no matter what the age. I think our younger customers are at varying stages of financial literacy. So if they are under 18 or 16, the parents are probably best situated to guide them through their journey. I think that
So let me stop you, Mr. Monaco, because I'm running short on time. But that was an important point. And so how are you then specifically at Bank of America? I believe you're from. How are then you then specifically protecting young bankers in connection to their sort of susceptibility, or what are you doing specifically towards younger bankers?
Sure, Senator. So at Bank of America, if a young person is less than 16 years old, they have to be entitled on an account with the parent, and it's up to the family to enroll in Zelle. And and ultimately, they can choose to use the solution or not. The parent can receive, as the primary, can receive notification by email of payments that are sent. They can also choose to deregister Zelle so they don't have to use it. If you're under 13, you cannot use Zelle at Bank of America. And so we also have a working group that is specifically working on developing new controls for our younger users. And Bank of America also invests in a financial literacy challenge for our middle school and high school age youth, of which education around fraud and scams is a component.
Thank you, Mr. Monaco. I appreciate it. Mr. Chairman, I am out of time. I would like to submit this line of questioning for the record. Unfortunately, I won't be able to remain for the next round, but I do want to understand more what we are doing to engage in the financial literacy as our young leaders are growing and evolving in their utilization. And I want to understand if Bank of America says at a certain age gives the ability for parents to disable Zelle, is that the case in all 2,100 institutions? I don't have time for you to answer the question, Mr. Fowler. I'm going to submit the question for the record. I wanted to make sure that you were aware that there's a series of questions that will be coming from my office, and I look forward to your response. Thank you, Mr. Chairman.
Thanks, Senator Butler. This issue of reimbursement is really fundamental to the people who lose money, real money, and it's also fundamental to the incentives for your institutions to do better, because if you're reimbursing, then you have a financial incentive to impose stronger measures, aside from just those panels that the ranking member mentioned that say, be sure you're paying someone you know. They create the kinds of incentives that enable and empower you to do more of the friction, slowing down people, actually, so they're not just breezing through a transaction. So I was, quite honestly, shocked by the statement made by that J.P. Morgan Chase representative this morning that we were ignoring the underlying problem in our report. I was shocked somewhat because, as it happens, Chase has the lowest reimbursement rate for scams of any of the three banks that we investigate. In fact, Chase reimbursed 2% or less of all scams disputed each year for the last 5 years. In 2022, you reimbursed 1% of all scam disputes. In 2021, Chase reimbursed 0.09%. In 2020, this figure was 0.01%. You must have amazing investigators, Ms. Felcher. What's your explanation for those numbers?
We reimburse the qualifying.
Could you move the microphone
sorry.
closer to you?
Sorry. Yes. We reimburse the qualifying imposter scams in accordance with the network policy. We know that the vast majority of these scams are originating upstream from when the customer actually goes onto the Chase app or chase.com to perform the Zelle transaction. Nearly 60% of the Zelle scams that we hear about from our customers are originating on social media platforms. We also know that criminals are spoofing the telephone numbers of trusted institutions like their banks, like the utility companies, or even
But
the
essentially, all of these claims were made by people who authorized the transfer of money? Is that what Chase believes? Because we're talking about less than 2%.
We reimburse the scams that qualified for the imposter scams, and we do not reimburse for authorized scams, for example, for those what their customers that are
You
purchasing.
do the absolute minimum required by law.
We actually go above and beyond the law in terms of our reimbursement for qualifying imposter scams.
Well, the numbers don't show it, do they?
I would respectfully disagree that we actually do go above and beyond what is required by law in reimbursing certain imposter scams.
Mr. Fowler, as of June, there's a new policy that certain kinds of authorized transfers be reimbursed, correct?
Chairman, that's correct.
What is that policy now?
The policy makes a distinction within the category of scams, which is what we're talking about right now, which is the authorized transaction. And it says when there are circumstances where an imposter specifically linked to a financial institution, a government organization, or known service provider is the instigator, then the Zelle rule, which is distinct from Regulation E, as you know, which doesn't require authorized transactions to be reimbursed, the Zelle rule, which goes above and beyond, it's those circumstances where there's an imposter that the Zelle rule says reimbursement.
In those narrow circumstances. Are the banks complying with that rule?
Chairman, I would challenge your first point. It isn't narrow. There are many, including regulators, who say that these are the most insidious and increasingly common. 95% of these types of scams are happening outside of the payments rails, outside of Zelle. So that's a separate topic, which is an important one. But of the 5% that are happening here, these are common. And in defense of my colleagues here, my explanation of the numbers that you read earlier were these are newer phenoms over the last few years. There hasn't been a regulation that required repayment, and as policies, procedures, technologies, and capabilities within the member organizations of the financial institutions within Zelle and within Zelle itself have improved, and the rules have come in place. The financial institutions within the Zelle network, the 2,100, of whom 95% are small banks, credit unions, et cetera, are living up to the expectations of the Zelle rule.
And where they're not, the percentages that I've used, though, apply to the 3 banks here. And you didn't dispute those numbers.
Senator, I don't recognize those numbers.
Have you used any kind of third-party review of your practices here? Any of the banks? Third-party review, some independent review of how you investigate and deny reimbursement? Ms. Felcher?
We take our responsibility to investigate every single claim incredibly seriously, and we're always ensuring that the quality of those decisions are high.
So you've never had a third-party review. Mr. Monaco?
Mr. Chairman, I am not aware of a third-party review. I can look into that and see if there in fact has been one. But I would make one other comment here, which is that when a claim is denied, right, and a customer at Bank of America requests a re-review, we do that. We have another investigator do it, so a separate one, and customers can do that multiple times. So we do think that each circumstance is different, each circumstance is unique, and we investigate each one fully before making a decision.
Mr. Vancini, I gather the answer is no third-party review. Mr. Vancini?
I'm not aware of any third-party review outside of the construct of external audit.
Senator Johnson?
So again, I'm just trying to clarify things. So I want to compare credit cards to direct payment. So you reimburse credit cards in a different way. What are the requirements for reimbursing credit cards? And by the way, I think it works pretty well. We've been able to stop payment and get reimbursed for things, as well as had fraud prevented. We get calls. We've had to reissue our credit cards in the past because somebody's got a credit card number. So I think that system works pretty well. But describe. I'll start with you, Mr. Monaco. Describe the difference between credit cards and Zelle from a standpoint of how the banks reimburse and what you're required to reimburse.
Well, first of all, Senator, thank you for the question. Zelle and credit cards are fundamentally different payment methods. Credit cards are regulated under Reg Z.
Again, what do you reimburse for credit cards versus what you reimburse for Zelle? Let's clarify that.
So under circumstances where a customer's card is lost or stolen and there's a purchase, we would reimburse for that.
So if somebody's using a card unauthorized, you reimburse for that?
Yes, sir. Right.
Okay.
And there are other chargeback circumstances which you referenced before, right, where the seller or the merchant hasn't lived up to their obligation, where we would reimburse our customer and then seek to recover through the
And then that becomes a dispute between you and the vendor. And you fight that out. But I mean, basically, you make the consumer whole almost with no questions asked.
Yeah, under the various network rules, depending on the circumstances. But yes, there's a dispute resolution mechanism. And if the merchant is found to have not lived up to their obligations under those rules, then yes, we reimburse.
Collectively, banks have about $160 billion of interchange fees to work with to make those reimbursements, correct? Which you do not have with Zelle.
That's correct, sir. Credit cards carry this notion of purchase protection that is built into the product as a feature of the product.
And it costs consumers $160 billion in some way, shape, or form.
Yes, sir. And Zelle
So isn't it true that banks would rather have your customers use your credit cards rather than Zelle?
Senator, we want
I would as a business guy. If I could generate $160 billion versus giving away something free, use that.
We offer our customers a number of different payment methods.
Right. And again, I'm trying to zero down. So why do you offer Zelle? Because your customers want it.
100%.
And why do you offer Zelle pretty much for free, Mr. Fowler? Because you use the data and you can make money off selling that data, correct?
Senator, that's not correct.
Okay,
we don't make money selling the data. The information.
So somebody is using this consumer data for something, correct? I mean, all these billions of dollars transactions, this data is being used by somebody somehow, correct?
Senator, I would say I can only comment on Zelle, but I just want to be incredibly clear. Privacy by design is underpinning the Zelle network. What that means is we run a token system, which is only name, email, mobile number, and financial institution. That is the information we have about any consumer using the network. That information is used, the token's used for the transaction. We do monitor interactions between sender and receiver. Of course we do. We do that to protect the network and ensure that the financial institutions, the 2,100 financial institutions, know everything there is to know about what's going on, but we categorically do not sell any data associated with the Zelle network to anyone for any reason ever.
So the banks, do you benefit at all from the data generated from your customers' use of Zelle? Mr. I'll go to Mr. Monaco.
Sir, we benefit from the products, the risk management products that early warning produces, right? Which is really the core of the company from its original founding, way before Zelle. So that is products such as account verification, right? So we know it's a valid account. Other products. That's how we benefit. We do not make we do not make money off it. We use it to keep all of our products safe, whether it be a checking account or a
Credit card transactions. I mean, is that who you're using to detect fraud in your credit cards? Early warning systems.
It's one of the many inputs and models that we use.
Again, I'm just really trying to understand the economic model, why you're offering something for free that obviously your customers value.
So, sir,
I mean, how many, you have over 100 million customers that use this, and how many billions of transactions on Zelle? So somebody has getting value out of this, right? And okay, there's fraud, people use this and there's scams and fraud and that type of thing, but it's at a pretty low percentage. Yeah, I'm just trying to put things in perspective here.
So at its core, Zelle is a substitute for cash and check, right? And it's convenient, easy to use. It improves the customer experience. So our customers want it. They want to interact with us digitally. It allows them to access their account in a safer way than perhaps withdrawing money from an ATM or writing a check that they then have to put in the mail, which exposes their account number and the bank routing number, which gives basically somebody all the information they likely need to perpetrate fraud.
So again, this is important to underscore. It strikes me as Zelle, although there's some risk and some fraud, is safer than cash, carrying around a wad of cash to pay people, and it's safer than checks. And there's no reimbursement on a check other than if you can catch it quick enough, you can stop payment. But once that is cleared, I mean, banks are under no legal requirement that was fraud, so you got to reimburse that check, right? Whereas at least on some of these things, you reimburse for Zelle. Okay, so again, I'm just trying to lay out the reality, provide a different perspective here. And from my standpoint, I can see why consumers want to use Zelle. I've always thought for a long time that banks would, kicking and screaming, agree to some kind of payment system that bypassed their very lucrative, very profitable credit card business. But you're doing it. I don't know. Seems like a good deal to consumers. That's all I got. Thanks. I guess we differ on that one.
No. I think you are hitting on a tremendously important point, which is the benefit to the banks of Zelle. It's a service that you offer. It attracts customers. You get data from it. It may look like it's free, but there's a definite benefit to the banks. Wouldn't you agree? Well, I'll go in order. Mr. Vancini.
Thank you for the question, Senator. I think the value to the banks is that we enable customers to do these transactions that traditionally would have been done via cash or check. That engages our customers, which is good for us. It also allows us to compete with some of the other non-FDIC insured institutions that are out there that are delivering similar type of services, and that's the value for us.
I'm just going to assume, in the interest of time, that I'll get much the same answer from others here. But the reality is, it's a service that attracts consumers in a highly competitive industry where you use advertising, you use the attractiveness of your bricks and mortar institutions, you spruce them up, doesn't produce any immediate revenue. You do all kinds of things, including data collection, which can be monetized and used, and Zelle is a vehicle to do it. And I guess the question that strikes me is, why don't you provide the same protection for your customers as you do when they use credit cards, which is a system that...
There's now $160 billion worth of revenue.
But they have other benefits besides revenue that may actually be worth more than
was trying to figure that out.
Neither of us is bankers, but I'd like to figure it out too. It's not something that you do out of the goodness of your hearts. It's not a philanthropic. You haven't set up a 501c3 to do it. And so why not reimburse everyone, which is in part the new rule that's been adopted, but doesn't go that far? Why don't we increase the coverage of the Electronic Funds Transfer Act to include authorized as well as unauthorized? Mr. Vancini.
Thank you for the question, Senator. I think I think it's a question that we need to be thoughtful about how we think about it and answer it. I think there are potentially unintended implications of expanding either through regulation or policy to include coverage of all the scams. I think there's some probability that that activity will result in more potential fraud as criminals become emboldened, as customers, as we talked about a little bit earlier, might create claims that are based on
You're
transactions.
saying
that they want back.
customers would welcome being defrauded?
No, I'm sorry, that's not what I'm saying, Senator. What I'm saying is that there might be more claims and more assertions of fraud that are not real claims. And then I think the other dimension of the potential unintended consequences is that while you have the three of the biggest banks up here today, there's 2,100 banks in the network, and the economic model without having something that looks like interchange, which Senator Johnson, you were getting at, something that looks like the merchant fees that come from credit card and debit card will be potentially onerous on the 2,100 other banks in the network.
Mr. Monaco?
Well, Senator, I agree with what Mr. Vancini said. I would add that, we believe that the current Electronic Funds Transfer Act and Reg E strikes a reasonable balance. And, Zelle is intended to be digital cash, and we have payment methods that are meant for the purchase of goods and services and include purchase protection. That's what's been discussed here with the credit cards. Zelle provides an alternative to substitute cash and replace checks, which have...
I understand. Zelle offers digital cash, a service. But why not reimburse in the same way that you do for credit card transactions when, through no fault of her own, somebody is scammed and you have the power to help prevent those scams through stronger measures and safeguards? Shouldn't it be incumbent on you to do what you do in the credit card area?
Well, sir, I think that it is incumbent upon us to continuously improve the safety of the product, which I think we are doing that, and I think the numbers actually bear that out. I think we continue to invest heavily in making it safer. I think ultimately an informed consumer is a better consumer, and the more that we have these discussions and have meetings like this, the more people are aware of the risks, the more that they can partner together with their banks and law enforcement and other stakeholders to make it a safer ecosystem.
Ms. Felcher.
We all have a vested interest in protecting all of our customers from fraud and scams, and we want to work together with everybody to actually drive out the cause of the problem, which is the criminals. And changing the reimbursement policy is actually not going to do anything to solve the problem, which is we need to actually prevent, identify, and prosecute the criminals who are taking advantage of innocent Americans.
I'm all for prosecuting criminals. I spent most of my life as a prosecutor. And your representative, I don't know whether they read the report that we produced, is strongly in favor of more criminal investigation and prosecution. Apparently, you have not read the report. So we're all in accord on that point. But people can be made better protected against criminal activity. You know, in the old days, I was a prosecutor, U.S. attorney in Connecticut. People used to rob banks. And then technology caught up with the bank robbers in various ways, and the banks were better protected. And in responsibility, they protected themselves. They didn't just say, okay, we'll become victims and then we'll just turn it over to the prosecutors. So protection and prevention are key. And my point is that the incentive for better protection and prevention would be if you reimbursed all these folks who, through no fault of their own, we're talking about the teller behind the counter who faces a gun and raises her hands and says, okay, I'll give you the cash. She's not responsible. And the person who is scammed is not responsible, but you don't reimburse them 99% of the time. Let me ask you, Mr. Fowler, has the percentage of reimbursement increased significantly since this new rule was adopted?
Mr. Chairman, are you talking about the percentage of reimbursement of scams that are associated with imposter?
Yes.
The answer is yes.
What percentage?
90.
Sorry?
90%.
90%. So of the total supposedly authorized scams, what percentage now are reimbursed as opposed to previously?
Mr. Chairman, if you divide the world between fraud and scams, you focus on the scam portion of criminal behavior. Approximately in our world, 20% of those are in the imposter arena, of which 90% are being reimbursed by the participating financial institutions in compliance with the Zelle rules.
So you're saying that 80% are frauds. Is that what you're saying?
No, excuse me, 100%. Let's focus on the scams. These are authorized transactions. We have 100 units of that. 20 of those units involve imposters, someone behaving like a financial services representative, a government official, or a service provider known.
Oh, I see.
Those are 20.
Within
Of
that
that
category,
20, 90%.
20%. So
Yeah.
when I said earlier that it was a pretty narrow category, 20% sounds to me like a pretty narrow category that fits your imposter rules, right?
I wouldn't agree with that characterization. It's significantly above what the regulation requires.
Okay.
We're a year into it.
So I'll withdraw my use of the word narrow and just say it's 1/5 of that category, correct?
That's correct.
And of those now 90%,
That's correct.
why not 100%?
Well, Senator, this is one of our network rules. It's one of the newest network rules. This says these are complex for customers and complex for financial institutions. We're evolving to stay one step ahead of the criminals. We're leading the industry. We've appreciated this government's support of us leading the way and the encouragement for our competitors to do the same.
Can I try and answer that question?
Well, let me just finish my question, then you can answer. Mr. Vancini, are you familiar with the people I mentioned earlier, Ariana Duval and Ann Humphreys?
Yes, sir, I am.
And would you commit to reimbursing them?
I'm not sure I can commit to that today, but I can commit to go back and relook at each of their cases individually.
Okay. Ms. Felcher, are you familiar with the Valdez family?
Senator, I am not.
Well, I'm going to give you a copy of a letter that is in our record right now, a statement that they made in connection with our May 21 hearing. They lost $10,000. They've never been reimbursed. They've never had a satisfactory response from your bank. Would you commit to reimbursing them?
I'm happy to look into the instance and take that back and follow back up.
You know, whatever the verbiage and the rhetoric in this room, there are people who are losing money out there. And your banks are kind of blowing them off. And that's why you may sense in my voice or in this report a certain passion for trying to treat them more fairly. The ranking member?
So let me try and clarify by offering a slightly different perspective. So banks obviously provide their customers cash. And when they've given their customers cash and they walk out the bank and they get robbed, I don't think anybody is suggesting the banks need to reimburse that customer for the fact that they were robbed, that a crime was committed. It's not the bank's fault. Banks provide their customers the capability of reimbursing each other or conducting transactions using checks. And once that check is cashed and the payment's been processed, I don't think anybody is suggesting banks ought to reimburse a customer if that transaction was fraudulent. So now we get to peer-to-peer. You get to a Zelle. So banks are providing this service that their customers obviously enjoy. And the chairman's suggesting that through no fault of the bank's own, through no fault of the bank itself, if that customer authorized a transaction fraudulent, now all of a sudden the bank's supposed to reimburse the customer for that crime. And he's comparing that to the reimbursement through credit card fraud. But the fact of the matter is, by charging customers $160 billion in transaction fees, part of that deal is insurance against fraud, right? You're not charging customers to provide insurance against fraud and against scams. So again, we're comparing apples to giraffes when you compare credit card reimbursement to Zelle reimbursement. Again, I don't think anybody, I hope you're not suggesting banks need to start reimbursing their customers when they get robbed on the street. Or when they cash a check.
What if they get robbed in the bank?
No, you're the prosecutor, not I. Who really has possession? Again, it's heartbreaking when people get.
What if they get robbed by the bank?
When they're victims of crime. But again, I think you have to put all this in perspective. Yes, they reimburse for credit cards. We have laws and regulations requiring them to do so, but there's a $160 billion pool of money to give the banks the capability of doing the reimbursement. It's not the same thing with Zelle. And I fear if you try and force them to do that, I think that transaction, that method of transferring funds, which is safer than cash, it's safer than checks, won't be available to consumers. So I think we need to exercise caution here in terms of where you want to get government involved in something in the marketplace, just screw it up. But anyway, that's my perspective, and I probably got to go vote.
Well, thank you for those points. I just have a couple more questions. I would be interested in your perspective on what I see as a growing use of Zelle for commercial purposes, because it's advertised, as I understand it, as a safe, fast, easy way to send money to people you, quote, know and trust. Is that true, Mr. Fowler?
Mr. Chairman, that's correct.
And according to the Zelle website, quote, small businesses received $217 million in payments through Zelle in 2023. I'm sorry, 217 million payments totaling more than $100 billion. And that number is increasing, correct?
Correct.
So it seems fairly clear that Zelle is moving beyond transactions between people who consumers know and trust. In fact, small business transactions are the fastest growing area for Zelle, correct?
Yes, they are.
So let me ask you, you said in an interview this year that Zelle's growth in small business transactions reflects a, quote, strategic push. end quote, in this area. At the same time, the Zelle website is telling consumers only to send money to friends, family, and others you trust. How do you reconcile the two?
Mr. Chairman, the most important point here is trust. The growth in small business interactions is an important one. It's a customer need that is had not previously been met and is one that our customers really value. It's a really important use case. In these circumstances, primarily, Mr. Chairman, these are micro businesses. They can be 1 to 5 employees. They are trusted relationships. They're frequently gardeners, hairdressers, beauticians, et cetera, where there's a settlement of a service rendered from someone you know and trust. So very, very consistent with the statement that you were saying earlier. It's the relationship that's the important point, and we're really proud to be providing this for small business. It's an important distinction, though. There's no point of sale and there's no e-commerce. This is direct account to account, insured deposit account to insured deposit account with someone you know and trust.
But isn't it harder to know whether you can trust a business as opposed to, let's say, a member of your family? I mean,
I don't know if I'm in a
consumers may be
position to
dealing
answer.
with the
I don't know if
business.
I'm in a position to answer that question. I can only say in the vast majority of the use cases that we have on this network, they are quite trusted relationships. Again, hairdresser, dog walker. These are the leading uses for Zelle.
But if someone calls and says, I'm from XYZ Dog Walker, or your local restaurant or salon, you don't necessarily know that person is with that business, or it may be a business you haven't dealt with. It seems to me that the more you broaden the potential recipients of cash, digital cash, the more exposed that consumer may be to fraud. Isn't that correct?
Well, Mr. Chairman, I think it's important to keep in mind that the same set of education, disciplined workflow, and alerts go into all of these transactions as well. This is a new payee. The alert comes up that my colleague from JP Morgan was mentioning that says, this is a new person. Is this the KYC identified name from their financial institution then comes up? Is this the person you mean? Then it's the amount. Then are you aware of fraud and scam? Are you aware this is no e-commerce? So I think the workflow and associated alerts in the actual transaction are additive to this as well.
So you're saying the standard alert is sufficient, that blank alert that comes up, standard alert is sufficient?
Senator, I'm not sure if I'm hearing you perfectly. Did you say standard alert?
About it being a new, let's say it's a new recipient.
Well, I think that, you know, the most important thing is that there's a relationship there, there's a connection, and in the first instance of payment, yeah, I do think that KYC alert that says, is this the person that you intend to pay, is a very important part of the workflow. I do. It's, we put 700 million of those alerts up last year. I think it's a really big contributor, notwithstanding the growth in small business, a really big contributor to the 99.9 success rate.
Would you oppose amending the Electronic Fund Transfer Act to cover both authorized and unauthorized transactions?
Mr. Chairman, I don't think that's the next most important step for us here. I don't. At 99.9%, we need to get focused on the criminals who are perpetrating this. Whole of society, cross-industry, cross-government solutions are the important
yes
next
or
step.
No? You'd oppose amending it to require reimbursement for both authorized and unauthorized?
Mr. Chairman, we should stay focused on the criminals for this next phase.
What's your answer?
I
We're
don't.
focused on the criminals. We agree. Mm-hmm. Would you oppose amending it to require reimbursement as is now done for the unauthorized transaction?
Mr. Chairman, reimbursement won't solve this problem. Increasing reimbursement, we
would
already
oppose-
lead the industry in reimbursement.
I don't mean to be hard on you. I'm just trying to get an answer. I understand you're saying you would oppose it. Am I incorrect?
Increasing the reimbursements will not stop the criminals and will not protect consumers.
Okay. I take that as a no. Would anyone here, let me ask this. Are all of you in agreement with Mr. Fowler in opposing an amendment? Let's just do an amendment that would include authorized transfers for reimbursement. You would, Mr. Vancini, would you oppose that amendment?
Senator, I think I answered a similar question earlier. I think it's an answer that really needs to be thoughtful. I don't think giving a yes or no answer to that question here in this forum is the
So
right.
you might favor some form of
I think we need
amendment.
to be thoughtful about it, and I think we need to think about what the unintended consequences
Okay,
of something
thank
like
you.
that would
Mr.
look like.
Monaco?
Senator, I think the current legislation strikes the appropriate balance. Any changes to that would have to be carefully thought of, reviewed, and we'd have to
So
look.
unlike Mr. Vancini, you would rule it out.
No, sir, I said we'd have to look at the details.
Ms. Felger?
Changing the laws to require reimbursement of authorized transactions will not actually solve the problem, which was the criminal behavior, and we believe would actually perversely incentivize more of these crimes.
I really hope that you would be willing to work with us in improving this system. I think we have a common interest here, because I really believe you care about your customers, and a lot of your customers are being harmed. So I'm just trying to make more of them whole in some way, using the law in a positive and proactive way, because the more you have incentives to prevent fraud, the more fraud will be prevented. And education alone won't do it. Notice alone won't do it. All you have to do is read the complaints that come to you from your customers that we have received. So I thank you for your participation today. The record will remain open for 2 weeks, and this hearing is adjourned.